All right, another week ended, and this week I learned something very important. This week I learned that the market doesn't always punish you for being wrong. Sometimes it punishes you for being right, but not being ready. So what do I mean by that? Well, this video is going to be a bit different because I'm actually going to show you two trades to put things into perspective. Although this is going to be a very deep psychological video, a very fundamental one for any trader, and this is definitely going to help me. This is definitely going to help you regardless of the stage of development that you're at, whether you're a beginner, developing trader, or advanced. This is something that will eventually happen, which is painful, although if we manage to extract the right amount of information and the lessons behind the reasons why this is happening, this can greatly be improved, which is exactly what we're going to do in this video. Although I'm just going to let you see my two trades right now, and then we're going to come back here and then we're going to extract the lessons together, and we will identify the core issues and how we can fix this sort of behavior. Okay, so this is exactly what I wanted to show you. This is what I mean by failing to manage the trade properly or failing to extract from the markets. So this is a trade that I took on Tuesday. This was Tuesday, 30th of June. So my idea was very simple. There was support here, and I'm just gonna place a long, and then hopefully the price would reach this level around here. Well, what happened is that I totally failed to place my stop loss below the actual liquidity, and this is what happened shortly after I entered. My stop loss got hit, and then 8 minutes later, which is here, the price just went in my favor. So this is just an example of me failing to manage the trades properly. And then with this in mind, it's just one of the painful examples that the list just keeps going on and on and on. This is just one of the most recent ones, one of the most, painful ones, because again, my idea was right, although because my trade management was so bad and my failing to place the stop loss below the obvious liquidity, it's just really bad trade management. So this is one example, and then the other example I wanted to show you, it's this trade, which is a more painful version of the previous one. So if we have a look here, I shorted a trade here. The reason behind it was very simple. This was a previous huge spike, and then the price went down, and then this was another huge spike, and then the pattern was very similar. I anticipated that the price is gonna go down again, which is exactly what I put my money on. On this particular idea, I entered here. Actually, I think my entry was around this area here, although that's not really important. So I entered here around this level, and then look at that, the price just kept going down, and then it just kept going sideways. Why I wanted to show this example is because I totally failed to extract some money and to stick to the plan and to execute my plan properly, because I had 3 entries here. And then the idea was very simple. I'm just gonna let the price reach this level. I'm gonna take some profits, either on 1 or 2 entries. And then I'm just gonna let another one run in case it goes further down. And then with the 1 profit that I'm gonna take out, or 2 profits, however, I'm just gonna pay for the potential loss for the other one in case the trade is not going down. But then look at that. So the price reached this level once, twice, 3 times. It reached this level 3 times, and then I actually failed to take any profits out of it, right? I had 3 big opportunities in the market to take the profits, to then move the stop losses closer to my entry, and then let the other runner go in my favor. But then I failed to do it. And this is just very poor execution. This is very poor trade management. And then look at that, like I entered the trade around 2:30 and then I exit the trade at break even because I couldn't hold it anymore because the price just kept going sideways. My emotional state was not, let's say it was not great in that moment, right? So it took 2 hours for the price just to keep going sideways, and then I exited break even. And then 1 hour later, I took the screenshot from my phone. Look at that. The price went exactly where I anticipated it to go, 4,100. And then that could have been my last runner. And then I could have easily made some very decent money on this trade, whereas I just ended at break even. So yeah, this is exactly what I wanted to show you, to show some clear examples of how bad my extraction and trade management is. Now it's time to dive deep into the lessons behind each one of these trades. So obviously the first one is just a pure mistake when it comes to the technical read of the market. And so even though my initial read of where the market is going to go was right, just the stop loss was not as good as my initial read. And so that's obviously has to do with trade management. That's obviously has a huge negative impact on the P&L, because instead of a loss, it could have easily be a winner, right? But the lesson is not there. The lesson is actually in the second trade, because that reveals a lot of the deep emotional stuff that's happening behind the curtain when I'm actually executing. And to be fair with you, compared to 2 months ago, I'm in a much better place. And what do I mean by that is that 2 months ago, I was struggling to just enter a trade. 2 months ago, I was struggling to pull the trigger. 2 months ago, I was just struggling to find myself inside the trade. Whereas now I have a much bigger and also a better problem, because it still has to do with execution. Although right now is execution under uncertainty. So why didn't I truly take the profits out of the second trade? Why did that happen? And to be very clear, the second trade is not a one-off example. The reason why I decided to show this to you and to do this video this week is because this is just a recurring problem, a pattern that keeps happening to me while I trade. This is something that's already obvious to myself, that there is a big issue over there. And no matter how hard I'm trying to force myself whenever I'm in these trades to actually stick to the plan, then sometimes it's just every single cell in my body screams exactly the opposite of whatever my rational mind says, right? And this has most likely happened to you in the past. This will most likely happen to you in the future. And I'm sure there are deep lessons over there as well. Although I have to be honest with myself, and I have to really acknowledge what it's really happening, because this cannot really keep happening if I want to become profitable. There must be something that I can do in order for me to actually become better of executing, better at managing my trades. And yeah, the deeper lesson is not that I need better extraction. The deeper lesson is that I want certainty. There's a part of me that just wants certainty. There's a part of me that wants control. There's a part of me that needs validation. There's a part of me that cannot tolerate regret. There's a part of me that would rather close the trade early than sit in discomfort. There's also a part of me that waits for the perfect tick because he wants the trade to feel complete, which is exactly what happened with the second trade that I showed you. I could have easily stick to the plan. I could have easily taken the profits out whenever the market delivers some profits, and then let another runner play its hand, and then I could have made a lot more money. Whereas, I'm not. Because I keep doing the same mistakes over and over and over again. All right. And that's why trading feels so personal, because it's like the market has something to do with you personally, right? But then, it's not personal at all. It's just yourself playing against yourself. Market is just a reflection of whatever is happening inside of you. So this is the deeper lesson. This is what's really happening behind the curtain. This is why I fail to manage my trades properly. This is why I fail to let the profits run. This is why I fail to take the profits wherever I set the targets for my take profits. And sometimes I try to get a better risk to reward, and then I just set the stop loss randomly without even doing the proper research when it comes to where the market could go in that moment. So why this is so important? Well, this is important because no matter how good your reads are, and no matter if you're right, if you cannot handle yourself, if you cannot handle the psychological aspect of each individual trade, and if you cannot understand yourself first and foremost, then the market will punish you, even though you're right. That's why most people trade so well on a demo account, and then when they finally get the chance to play with real money, that's why everything goes down. Because reading the market is actually the easiest part of trading. Like, reading the market and just having a profitable strategy is just one aspect of trading. But then what do you do with all that information if you cannot really master your emotions when you are in a trade, right? So you can see the truth and still fail to act on it if your nervous system cannot tolerate the uncertainty of execution, which is exactly what has been happening to me for a little while right now, right? It's painful. It's something that every trader will eventually go through. But again, we have to be honest, and I have to be honest with myself. And I need to know what my weaknesses are. And obviously, how can I actually overcome all these weaknesses? Because that's the only way forward. That's the only way of becoming profitable. So the true edge is not just technical. The true edge is truly a mix of both technical and psychological.